right? So Old Capital does 4 different types of lending. Now, these are the primary functions of getting these transactions done. You can do private lending, you can do seller financing, you can do hard money. Those are all opportunities and options for you. We don't manage that kind of lending. So for us and for many of the brokers out there, they focus on 3 of the 4 types of loans. We do bank, we do bridge, we do agency, and then we also do CMBS, which is commercial mortgage-backed securities. So if you're taking notes, which I highly recommend, or you can get a hold of the recording, make kind of a list, and I'll kind of break these down so it's very clear. But what we do first is when you get a deal, I encourage you to find out where the money is going to come from, because as a lender, we're going to want, regardless of the type of financing you're going to be using, if you use Old Capital or you use another mortgage broker, we're going to be looking for on most of these 10% of the down payment coming from the general partnership. So you might say, well, what is a general partnership? We like to look at that from a finance side, kind of like you're flying a plane. So if you think about the cockpit, those are the GPs or the KPs. Those are the people that are in charge of the transaction. That can be capital raisers, can be on a GP, a key principal or a general partner can be in the cockpit. These are the people that are signing on the loan. The GP can also be an LP, which is the passengers of the plane, right? So you can, as a GP, bring money and you can sit with the passengers, but the passengers, all they do is they talk amongst each other. They talk about how great you're flying the plane, but they're eating their peanuts and they're sitting back and enjoying the ride, hopefully, right? So from the general partnership, those people that are flying the plane, they're signing, they have to have a portion of their own money. So when you hear people say, I'm using other people's money, there is a sense of, I can do this, and I want to encourage you to know that you can do this, but there are limitations to getting the loan, and we need to figure that out first. A lot of people go into single family, they do fix and flip, they do wholesaling so that they can get capital so they can go to multifamily. That's really why a lot of people start that way, and we then can have a nice down payment to help with the GP. All right, so let's talk about bank. Bank is simply your local bank, or it's a regional bank where they, like a Chase or a Wells Fargo. Those guys are using depositors' money. So your aunt and uncle, all of your grandma, they deposit money in these local banks. They are conservative. So typically when you would walk in, or if I can help you with the bank loan, we'd be looking at $1 million minimum for Old Capital. Now you can go directly to a bank, you go walk in the doors and say, I need a commercial loan. They'll go below 500,000, but we start at $1 million and 5 units. What typically we see, and this is kind of like what works at your bank may not be what works in Minneapolis or in Jacksonville, Florida. Every bank is different. But what we see typically is about 75% loan to value on a bank loan. You usually get 5 years of financing, and that's a bridge. That's a balloon payment. So day one, typically on a bank loan, you're starting to pay principal and interest, and it's amortized over 20 to 25 years. So you're starting to pay your principal and interest for 5 years. Well, you're not going to pay that whole property off in 5 years, right? At 5 years, you got to go either sell it or get another loan. So these are shorter term loans. Because they're amortized only 20 or 25 years, your payment is going to be quite high. Right now, we're seeing anywhere from 375 to 5.5, depends on the region, depends on the opportunity, it depends on the GP, the person who's flying the plane, it depends on your net worth, liquidity. It's a whole package. But here's the deal. When you look at a bank loan, it's like a house loan in some ways, because you're signing your life, your bank accounts, your balance sheet, you're signing away on it. And you are personally responsible for that. Now you can say, yeah, I have an LLC. That's great. But at the end of the day, they're coming after you if you don't take care of this property. Okay. So that's called recourse lending. Okay. You'll see that in single family. You'll see that in bank financing. Now, let's say you want to buy a house or you want to put your kids through college. Well, if you've got 2 or 3 or 4 of these properties on your balance sheet, they're going to say, no, sorry, I can't get you that bigger house because you have all of these assets against your property. So I can maybe give you 50,000 and it's really gonna have it's gonna cut back on your buying power. All right. So it has its place. They're gonna look at you, they're gonna look at your tax returns, they're gonna look at your statements, you're gonna be signing your life. Okay. Not a problem, but I want you to understand some of the limitations. Sometimes sometimes investors, if you're syndicating it, they don't like to have the GP or the KPs signing. They just don't want that. So you have to think about your investors, because ultimately they're the ones that are providing you money to finish this, your 25%.